Equity investors have been on the edge since the start of 2022. From Ukraine war to a sharp turnaround in interest rate cycle, investors have been toiling with wild swings across global markets. Lately, investors have become risk-averse in the backdrop of rising inflation and have been selling the rallies. Given this, most analysts say the risk-reward for investing in Indian equities remains favorable despite the global headwinds.
Markets are in a situation of flux. It has become very complicated to express what the market is saying. At the moment, the additional variables to the usual metrics that we track are disruptions due to existing and potential impact of the war, of quantitative tightening, which are leading to high inflation and rates being increased all over the world. This has impacted developed markets and emerging markets alike. One could say that developed markets are actually seeing a very difficult time at the moment. In this fraught environment, India is very well positioned.
Back home, the retail inflation climbed to 7% in August, staying above the Reserve Bank of India's target zone for the first 8 months of 2022. Yet the levels are not as high as being seen in developed countries, which is keeping analysts bullish on India's growth outlook.
There are many indications that the growth scenario is bullish and that various sectors of the economy could do well. We have also seen the credit growth at multi-year high at around 18%. Our manufacturing sector is going to do extremely well, mainly because of the corporates themselves, businesses spending more money on new projects, and also because of various schemes like the PLI, where the initiative has been with the government of India, and also on account of the China Plus One strategy. All these things are going to benefit the local manufacturing companies, and the overall economy is also doing very well. These things should help and support the domestic equity market. Therefore, if you're making investments, you could wait for a little more while before you take the plunge. In a question of precedence, domestic markets or overseas markets, it should be the domestic markets as the primary investment destination, because domestic markets are likely to do much better.
Indian equities performance thus far in 2022 has been a testimony of this confidence. The return of foreign institutional investors who have pumped in over 64,000 crore rupees since July 2022 has also lent support. While key global indices including Dow Jones, S&P 500, Nikkei, Hang Seng and MOEX Russia have tumbled in the range of 4 to 36% so far in 2022, the S&P BSE Sensex and the Nifty 50 have gained over 1.5% each. With this, the domestic equities have turned relatively expensive, but analysts still suggest investors focus on domestic equities for now. According to G. Chokalingam of Economics Research, global pain in the form of deflationary condition would help India in the form of cheap oil and moderation in trade deficits and inflation in the near future. We continue to believe that the domestic markets would recover significantly after every major fall in the short term, and the Sensex would hit another record high level by the end of CY 2022. As regards today, the US Federal Reserve's interest rate decision will be on investors' radar.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.